Those are all, in my opinion, positive things that came out of that.
Yeah.
The three dissenters, yeah. I mean, it's the inflation concern of the oil concern, which we're going to talk about, but it's kind of wild too.
All thoughts and opinions shared in this recording belong to the participants. Views expressed are as of the recording date, are subject to change, and are not guarantees of future results. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to the Market Moment. This is Matt here with Isaac.
Hello.
And John.
Hello.
And we've got a good conversation today. A few topics we want to run through. Market is absolutely ripping. We're recording this a little later in the day. We won't get into why, but some technical difficulties this morning. But Claire is awesome and she figured it out. So
she figured it out.
We're recording this in the afternoon, so we've got the day to look at, and the market is kind of going bonkers.
Yep.
SpaceX earnings call after the close.
F3.
So a lot of crazy things going on. Today we're going to jump into kind of looking back last week. Fed rate decision. You know, Fed didn't change rates.
Yep.
But there were three dissents that said that they thought they should have increased.
Yeah.
So what were your takeaways on the Fed's meeting last week and kind of what came out of that?
Okay, I think the dissenting officials, the Minneapolis one, the Dallas one, and the Cleveland one, raised a little concerns. I think the market actually took a little bit of a hit from that. And if you remember that day, volatility.
Well, the market was down at the open.
Yep.
It spiked after the Fed announcement. It rallied, and it's kind of like, wait, why is it rallying? And then it sold off.
And then it sold off. So and you never know if that's from what they say or not. But the information that they gave, and Kevin Warsh emphasized that the U.S. economy continues to grow at a solid pace with strong business investment, productivity, and capital expenditure despite global uncertainties such as Middle East conflict. The labor market remains healthy. The job growth keeping pace with the workforce, and unemployment is broadly stable. So those are all, in my opinion, positive things that came out of that.
Yeah.
The three dissenters, I mean, it's the inflation concern of the oil concern, which we're going to talk about, but it's kind of wild too. I mean, It's kind of like the market. We go down to 70, it goes up to 100, it goes back down.
Yeah.
So it's wild too. This war is wild, whether it's going to be done or not, or who believes who and so on. It's gone a little bit crazy too. So I thought the Fed meeting, the only thing I'm concerned, we were supposed to have been lowering rates by this time, and we are, of course, not because of the inflation concern. But again, market's resilient, and we've somehow just moved right on through that.
I haven't gotten to check the odds. I like to look at the odds of if they're going to cut the next time. I'm trying to find my quick sheet, but
42% chance remaining unchanged in September, with a 57% probability of a 25 basis point hike in September, which is way different than it was at the beginning of the year.
Yeah. I mean, it's been lingering out there. I don't know. I still feel that. This is just my personal opinion, that they'll find a way to not hike it. That just seems like it would be something that a Fed chair wouldn't want to do as soon as they get in, but also maybe he doesn't care about the market or things like that.
I'm almost kind of the point where you get tired of talking about it. It's just just hike 25 bips and then move on.
I like the word hike. We're in football season.
Yeah.
Hike.
We are in football.
Anyway.
Well, not yet.
But I don't want to hike in the Fed.
On Thursday.
Yeah. Okay. We're getting ahead of ourselves. We're getting ahead of ourselves. So, I kind of wish they would. They're always early or late. It's like if you're going to quit worrying about should we do it now, should we do it in September, just hike 25 basis points, leave it alone for 6 months,
and see what happens.
And then see what happens.
Yeah, and it's not that big a deal, by the way. 25.
Right.
I mean, basis point hike.
I don't think the market will freak out. You might
don't think so.
You might see a little short term kind of
little panic because people like to panic, but I don't. Yeah.
Yeah. Speaking of panicking, so we got oil. When we were talking about this last week, prepping for today's show, oil was up big. Today it's down big. So this is kind of a good timing of just to illustrate how volatile oil has been. I mean, with one post from Iran or Trump, and you see 5-10% swings in a given day. So thoughts on oil, and it's down big today.
I'll start, Isaac, real quick, just to give you some data.
You hit me.
The CBOE Crude Oil Volatility Index, okay?
Can you explain that?
Not really. But it monitors the volatility of oil, but it has been as high as 126 and as low as 23 52-week high and low. Before the Iran war, we were around the 23 on the volatility index. We got all the way up to 126. Right now, it's at 57. Okay. So I know that you have to go research what I'm talking about there, but it's like the VIX, and it's just a wild moving index based on the fear of oil or the volatility of oil. But that goes to show you it went all the way to 125, back down. Now it's at 57, closer to the 23 it was before the war started. So anyway, it's wild.
Well, it just seems it does seem all based on the war, and that changes. It feels like every couple hours,
minute by minute.
So it's funny if you go to like the year-to-date chart of oil. I mean, it'd give you a whiplash if it was a roller coaster.
Yeah.
It's insane.
Yeah. I don't really have a whole lot to add other than it's just been volatile, and we need, that's tough. I mean, I can't imagine if you're a business and you're trying to plan for what are gas prices going to be over the next 6 to 12 months, and you're budgeting for that and trying to manage cash flows, and it's like diesel's up big, and you're trying, that would not be fun. So
me and my wife were planning a trip, and whenever it started kind of spiking, we bought the plane tickets.
Really?
I was like, let's get in front of it.
It's probably smart.
You know?
Plane tickets in Europe are worse than here. Their oil crisis is different than ours because they do get oil from that area, and we don't really have to rely on it. But we need oil to come down. But I'd say like your point, the logistic companies, travel, airlines, they have a rough time right now trying to keep up.
That's what Walmart's last earnings report, they kind of blamed oil prices pretty heavily on a lot of their stuff.
I mean, it's like the market. Like
they have a few trucks on the road.
There's a couple.
You need you just need some kind of stability, even if prices are like trending higher.
Yeah.
Just some kind of predictability of like, okay, so we can plan for it. When it's this volatile, it's just hard to plan.
One thing that stinks, and I know I get off the sidetrack here, but it stinks how any little thing can make the oil prices spike when in reality, they're really not. They shouldn't react that way. But quickly. It's almost like it's like taking advantage of stories. It just drives me crazy. I mean, and you notice that every day with anything. Trump doesn't push the button to launch missiles. It's calm, everything's fine. The next day he launches one, and all of a sudden that's going to be the catalyst that makes oil not flow anymore.
Trump came out the other day and was like, he was pissed at Chevron and Exxon or whoever. He's like, they've made way too much money through all this.
Oh, no, they're gouging. I mean, it's a little bit of a gouge.
It's
hard to, you can't really say that without knowing. I guess the president can say
he can say whatever he wants.
But it's hard not to think that when they raise, it's like,
it definitely feels that way.
It never comes down as fast as it goes up either, whenever things go back down.
Yeah, you're not going to show up at the gas pump tomorrow and oil's down what's oil down today? Oil's down 6% today, 5 something. Yeah. It's like you're not going to show up at the gas tank tomorrow with gas prices
down 6%.
Down,
Probably be unchanged.
Yeah.
Yeah.
But like you said, they'll raise it.
All right.
That night.
Quickly, so we're kind of hammering through this. Quickly, Microsoft. So Microsoft Azure, it's their cloud business.
Yeah, that was it.
Is it?
I think so.
Azure? Okay.
Yeah, it sounds good.
Azure. So that part of their business, their cloud business, did $100 billion in revenue. So I looked this up. Microsoft, the company, the entire company, first did $100 billion in revenue in 2018, and now they have
a spinoff, basically.
Well, yeah, part of their business that's doing $100 billion in revenue. So that's pretty wild. Microsoft, year to date, I should have this pulled up.
Oh, it's cruising.
Let me see.
It's up about $120 a share just in the last month or so.
Tell me what the Dow's doing.
I mean, it's doing good.
Microsoft's only up 3% year to date, 5% year to date.
Yeah, and look what happened. It had the sell off, and then it was
down.
It's cruising
so now
back.
It's rallying.
Yeah.
So it's just crazy. Some of these companies, you look at Amazon, Google, Apple, Meta, Microsoft.
Yep.
They have $100 billion companies inside of the company. They're running so many different businesses. They're so profitable. Cash flow is way down. We talked about that a few weeks ago because they're investing. CapEx is so high. They're investing so much money that free cash flow is way down. But these companies they're printing money.
They are printing money.
And I can't wait for the day Mach 1 has just this little side hustle that does $100 billion in revenue.
I know. These stocks are great because we're kind of trying to find reasons for this market to sell off, and I've been kind of the bear on the panel here. But these companies are actually not priced that bad.
Yeah, they're not crazy.
You know,
There's
in
a lot of
comparison.
it's crazy to think like Microsoft's trading at a pretty good spot.
I mean, yeah, for
And-
its history, it's actually in a pretty good spot. So is Apple. So
Yeah.
I mean, it's not like 2000 tech crisis time when everything was trading way above, or 2008 when we had a very glutton high PE ratio. This is actually different, and it's just this AI stuff, and they're selling this AI stuff and this cloud stuff out to business, whatever. They're making money.
They just keep
These
on selling to
companies-
Meta. They're just spending as much as they possibly can.
Yeah,
That's
crazy.
All right, last thing we had for today. So today's gonna be a little shorter episode, but college football sponsorships.
I feel like we're going really fast.
We are.
I'm gonna start talking.
We're recording this like middle of the day and we have meetings, so
I know, that's
we gotta
Yeah.
get through this. College football sponsorships. I have no idea why we have this on here.
I know, it's cool though.
So this is
Yeah, but what's cool?
well. So there's been a ton of massive
like
$1 million
deals.
jersey patch
Yeah, that's
deals.
right. That's right.
Like Big Ten is now sponsored by Monster Energy.
Yeah.
So like
and
it'll
Ohio
be
State, JP Morgan.
JP Morgan Chase. Yep.
Yeah,
So they'll
and
have Chase
Ohio
on the
State.
jersey. It's funny. I was watching a video today where Monster was kind of the first one to go out, and they got the whole Big Ten for $20 million a year. And then just Ohio State's deal was $17 million.
Well, which was the highest ever until Notre Dame.
Until Notre Dame came in with
20 million.
SoFi.
Or 21.
Yeah,
21
SoFi
million.
21 million annually.
Yeah.
So for
Is
one
it-
team, and Monster paid 20 for.
Here's the
entire Big
question.
Ten.
Here's the question. If
So-
you're Notre Dame, is it time for names on the back of the jerseys? If you're gonna start slapping like sponsorships.
Oh,
I mean, because
yeah.
this is whole.
Oh,
Notre
I know,
Dame's
you're
the whole
right.
tradition.
You're right.
Like we're not gonna. It's like okay, you're gonna start selling real estate on the jersey to SoFi.
Yeah.
Is now a good time to throw the name on the
Well,
back.
I do know Notre Dame, when the offense is not on the field, when the defense is on the field, the offense has to do process loans for SoFi. So they're going to have some desks out there. It's a little weird thing, but they got a lot of money.
Hey, Arkansas
Yeah.
is going to have Tyson Foods as a patch.
Oh, that's right.
That's pretty
Not
cool.
bad. I wonder how much was it? 21 million was it?
I mean, college athletics in general has just turned into.
No.
You know, you saw what's his name, Pastner for UNLV. We were talking about this, how he's like, hey, why buy a professional sports team when you buy the UNLV Rebels? And that's kind of what it's turned into.
Yeah.
I mean, there's they're just teams and athletic departments and conferences are having to be so creative on how do we raise money because it's an arms race to who can spend more.
I
Exactly,
miss
and
the
buy the
old
players.
days. Isaac, you said something to us earlier how you missed out on $10 million or something like
Yeah.
that. But
mhm.
because you play college football, you know, Isaac played college football for the Tulsa Golden Hurricanes.
Yeah, I lived on $800 a month of money from the school.
There you go.
Yeah,
Making
and then you
big
got
dollars.
you got a little check though, right? A tiny little check because they didn't want you to come after them because they started paying people later after you had left, right?
Yeah, well, it was actually not. It was pre-NIL, but the NCAA. I think it was another NIL case, but they settled before this.
It was hush
They've
money.
always been in like contention with somebody
Yeah.
mad about NIL. But yeah, they sent me a check for like $4,000, and we're just like, "You're not allowed to sue us,"
That's crazy.
which I gladly took.
Well, and I think today, here's my little last. I know we're going fast here, but college sports kind of is ruined for me. I mean, I go back to the 80s, 90s. Kids grew up in Arkansas, for example. You had Darren McFadden, who grew up as a Razorback. Peyton Hillis. We have Hillis relative in the studio today.
Yeah.
Big deal.
Nice.
Big deal, Hillis over there. But Peyton Hillis, Darren McFadden, they wanted to play for the University of Arkansas. They had passion. They grew up as Razorback fans. That is no longer the case. It is purely money.
Right.
Yeah.
So the kids no longer have loyalty. And I understand that, right? The kids no longer stay. I was watching the Razorbacks basketball team play today in the Bahamas.
Yeah,
And it's so cool to watch these Razorbacks. But I have no idea who
I was
they
gonna
are.
say name one player.
No,
on the
I have no idea because
Just
they're
don't know
all
yet.
new players.
Yeah.
And somebody was telling me, is like, oh, yeah, he played for Cal, then he went to Illinois, then he's at Arkansas. I'm like,
it is very different.
yeah, it's
for
so
sure.
different. It's not as good as it used to be, and I kind of don't like. I like our college basketball because we do pay money for them.
Yeah.
So we're fine there.
Yeah, it's definitely changed, and yeah, it's just the Wild West. We went from hey, you couldn't pay anybody, even though that was happening under the table, to it's like the Wild West, and you can pay anybody anything. It's like
Yeah.
if we've learned anything, it's that the people at the NCAA,
Yeah.
like the people said, aren't very smart.
No,
I mean, they're
Now,
not. Like, I mean,
I want the
100%.
audience to know something though. You two both play college sports, okay, and that's pretty awesome.
Yeah.
I studied finance
okay,
only,
okay.
so it's. I mean, you know, you each have your passions.
And yet
that's
we
fine.
both ended up on the same podcast.
I was wondering where that was going.
Yeah.
That was good.
No, well, I know today was a quick conversation. So we got the Fed rate decision, oil's all over the place, Microsoft revenue, and college football sponsorships. Some fun topics to talk about.
Yes.
Have
finance focus. Yep.
And yeah. And we have a listener question that we're going to get into here in the next week or two. I just got today, so that'll be cool. We'll talk about what's going on in the market. So any parting words or?
Good. Hall of Fame game Thursday.
Hey, thanks.
Football season is upon us.
Thanks to the listeners. I have started running into people that actually listen to podcasts that I haven't met yet, which is kind of cool because they come. But anyway, send us questions. I love it when listeners send us questions.
Yeah, the one I got today was a good one, so we'll have a good conversation.
Love
so,
it.
as always, we appreciate you guys watching, listening. Give us a like, subscribe, and we will look forward to seeing you guys next week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com.